one of the big, critiques or recent kind of pushbacks that investors have had on ESG integration and thinking about ESG in the public market space is that it's focused on financial materiality to the company versus impact materiality to the world. So this concept of dual materiality has really taken front and center, and that's one of the reasons why the regulators are really focused on this, the SEC, the European regulators, the UK regulators, and I suspect that this will continue. In Asia, we're seeing, a lot of focus on climate risk, for example. We're starting with that, not just the materiality to the companies, but what is it that the companies are doing that could be material in the future, right? So, the more informed investor, I absolutely agree, will start to think about impact as it relates to their full portfolio. You mentioned a little bit on the areas of impact and education, agriculture, energy, right? When we think about what's happening in the world today, and you mentioned this earlier in your comments, the conflict in Europe, right? And this over-reliance on energy from a single source has given this newfound acceleration towards the adoption of energy efficiency, clean energy, renewable energy in the region and around the world. But that's not the only thing that's going on, right? I mean, the reliance on fertilizer exports from Russia and the Ukraine, the reliance on wheat exports and the impact it's having on food prices is also kind of giving some light in terms of what does it mean to feed a growing population? And how do we tackle that in the future? And, me maybe being a little bit of an optimist, and I love your views on this, I really feel that this is a tipping point for industry to start to think about fertilizer and how do we adopt and change fertilizer from the chemical fertilizers that we're using today to more sustainable uses of fertilizer, using ag tech, using precision farming to increase crop yield, to make food production just more efficient. And so it's an opportunity for some of these businesses, and you know more than I do in the private equity and VC space, but for some of these businesses to really start to achieve scale. What are your thoughts on that?
Yeah, no doubt at all. No doubt at all. I think the Ukraine crisis is going to spur innovation in all of the directions that we've been talking about. But it's going to have a second effect too. It's going to shift a lot more of the national budget of many countries in the direction of defense, Harlin. And there'll be less money to expend on social issues, for governments to expend on social issues, and some forms of environmental improvement. And so it's going to drive impact investment because governments are going to realize that the change in capital markets that we've been talking about gives them an opportunity to attract investment funds alongside themselves to achieve their priorities, social and environmental. And so we're going to see a period now where governments are going to shift to some pay-for-success procurement, where they pay when certain social or environmental improvements have actually been achieved, and the investors put up the money in the form of pay-for-success securities, like social impact bonds. We've talked about sustainability-linked bonds. I think we're going to continue to see a growth in these. And we can expect, therefore, our financial system to begin to incorporate impact as a driving force of profitability. What do I mean by that? Values have changed. Consumers don't want to buy the products of companies that are creating harm, as you were saying. Talent doesn't want to work for them. And entrepreneurs are taking advantage of the fact that investors have realized these changed preferences are going to affect the returns on their portfolios, and entrepreneurs are bringing their technology skills and this new impact thinking to take advantage of these new trends. And the transparency around the impacts of companies is going to expose opportunities that we haven't been aware of until now. So obviously, the car industry was always identified as a big polluter, and Elon Musk and Tesla took advantage of that. And they grew because consumers wanted vehicles that didn't pollute. It was the change in values that enabled Tesla to get its sales going, basically. And
he also had a little bit of the cool factor, right, with the car. So he took advantage of the fact that, you can make the adoption of, electric vehicles actually cool. And so it creates this, greater kind of drive by consumers to get the same car, right? It's kind of like what Apple did years ago with the iPhone. So,
right, but he's different from Gates and Jobs, right?
Yep.
He's different because he had an environmental goal as well as the goal of becoming a leader in the automobile industry. And that's what characterizes the new generation of entrepreneurs. They want more meaning in their lives than just creating a business that makes money. They can see the planet threatened. They can see society in Black Lives Matter, rebellion in France, in the Gilets jaunes, and so on. They can see society today losing their social cohesion because of exclusion of different kinds, because the benefits of prosperity aren't sufficiently shared. And so this new generation of entrepreneurs is finding meaning in creating businesses that do good and do well at the same time. And their models enable them to grow faster than a business that doesn't deliver any real positive impact because of consumer and talent and investor preferences. So it's a long way of saying that we see a variety of forces coming together now to create another revolution based on tech, but this time which incorporates impact. And that's why I call it the impact revolution.